108 Capital joins us now. Nimesh, good to have you back. 108 or 108, 8 plus 1 is 9. Is that the number derived from numerology for your firm?
There are a lot of reasons for that, which I think I will definitely chat offline on that. But yeah, one of them is what you just said,
Oh,
for sure.
nice, nice, nice. I thought as much. If one has to look at the absolute performance for some of the fintech and consumer stocks, first, it was a one-sided selling. Now it's a one-sided rally. Where will they settle?
So I think, Nikunj, I think let's just go back a little in time, right? Post-COVID, I think the period that we were looking at was an illusionary period, a period which had favorable conditions like low interest rates, excess liquidity in the system, benign inflation, which all led to the belief that this will continue forever, right? And that's where the illusion was, with complete disregard to history, right? So I think that's when you saw valuations where they were, mistakes were forgiven, mishaps were forgiven, and people were just pumping in money, right? Then we saw a period where interest rates started to rise, right? And that's where you started seeing focus coming back to reality and how traditional businesses are done and valued, right? So some of that started percolating down towards the new age tech firms, and you started seeing the pressure build up, right? Today, we have reached a stage where some of the issues that we were looking at are tapering down, right? For example, inflation is now more or less coming under control. We already saw the statement from the US Fed in terms of how they're looking at the interest rate hikes. So some of those factors, with of course the growth being there in all of the newer tech companies, both globally and in India, I think it's time to relook at allocation into this section, because I think large part of investors also stayed away, right? Because these are high beta stocks, and people would stay away from this segment, and that is what you saw happening in the last few months. And today, now many of the stocks, even if you look at the US markets, are up around 30 to 50% from the lows, but way away from their all-time highs, which I think will take some time because the period of illusion is gone. But I think, yes, fundamentally, I think these continue to remain long-term bets. Change is inevitable, and I would continue to look at them favorably for the long term.
Nimish, hi, morning. Wanted to also understand the outlook for some of these companies in light of the fact that we've seen a global tech meltdown. There has been loss reporting businesses. We have seen mass layoffs as well that has taken place. Is that an underlying or a lingering worry that things could reverse as quickly as they did?
So I think one of the things that I said earlier was mistakes and mishaps were forgiven, right? I think one of the most important role of a founder who's raising money is basically capital allocation, right? You need to allocate the capital in the right manner because you are still in an investing mode. You're in a high growth company mode, right? Most of the capital that was being allocated in the past in that period was for growth of customers, right? And that's what you used to see across the board, which would lead to business growth, and ultimately you will monetize in the future. However, I think the period of this normalcy, the period of what I think Mark Zuckerberg just mentioned last week, is going to be year of efficiency. We would see capital allocation being done the right way, and by the right way, I would mean in the way a businessman would do. So allocating it for growth of business, allocating it for growth of customers. Also, you need allocation for new business and innovations, because these are very innovative companies. And at the end of it, you also need strategic growth. So that leads to capital efficiency, and that's where you're seeing layoffs coming in, because of course in euphoric times you would chase growth at any cost, and that's where they were investing huge amounts. So I think capital efficiency will come in, which ultimately leads to P&L positivity, and that's why you're seeing the re-rating of stocks that is happening in the Indian market as well. So I think these factors, and again, external factors are also favorable. So I would look at them positively now, with traditional business sense prevailing over new age tech companies. So I think it's a mix of traditional versus new age coming together, and sustainability and scalability prevailing.
What these stocks at the IPO price for Paytm, for Zomato, for Nykaa, what should they do? Average it?
So that's one thing I think. No, so if you are a long-term investor, I would invest in this market, no matter where the stocks are or which stock you're looking at, because ultimately, when some of these stocks have got listed and have got very good promoters, very good founders, good governance, I think when all of those tick marks are done, and of course, growth will come, but we have to be patient, right? You cannot expect 100% growth quarter on quarter and the stock price to just go in one direction. So as a long-term investor, I would invest, which is very unlike what we see in the retail market in India. So it's for a patient investor game. So as a patient investor, I'll definitely invest.
So, Nimish, if one has to just look at entering into some of these stocks at the current levels, I just want to understand what are the parameters that you look at to know that a business model can deliver exponential growth?
So I think, of course, the most talked about one is path to profitability, right? But that again balanced with the right amount of growth in the right businesses at the right cost. Right? So I think that is something we need to deep dive into the numbers, where the growth of business should not be at the cost of profit. I think we were used to a time when cash burn was a currency, right? Today, cash burn is no more a currency. People want to see scalability, but at the same time, you want to see sustainability. So of course, it all boils down to the profits you'll be making. And at the end of the day, once you're out of the high growth phase, you go into the normal growth, and that's when you'll be valued on a price to earning basis, right? Which will eventually happen. You will no longer continue to get valuation that a tech company gets forever, right? So even if you look at any of the names globally, ultimately it boils down to the business they are in, right? So Facebook, Google, at the end of the day, would command a large valuation based on their advertisement revenues and where your money comes from. So I think that is what we would look at. And of course, I think the vision is very important of what the founders have in terms of where the business will grow, where is innovation coming from, because ultimately, I think there is only a point up to which you can grow a business that you started with. You need to keep on innovating, you need to keep on adding, and you need to go on going deeper into the wallet of customers. So is that something that any of these companies are doing? Or we got a first mover advantage, we started a business, we replicated something from the West, and that's where we are. So I would look at innovations and growth in terms of business profitably a lot more in detail.
Right. Nimesh, I know I'm going to be putting you under the spotlight with this one, but just wanted to understand where is within this entire space your own positive bias. Any names that you could give us?
So I will stay away from giving names because I've invested in some of them. So I think that there's a conflict for me right away.
Okay, Nimish, we'll let you go on that note. Appreciate your time. Thanks very much for just putting that into perspective, because this is definitely a space that commands a lot of attention. I just want to move